The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, do we go into the breach, dear friends. And as always, we like to start this day off at 2 o'clock.
The following takes place between 2 p.m. and 3 p.m.
It does. And, of course, we've got a market out here. We talked a little bit about it, I think, was it last week? Was it this week? Everything just kind of blurring in together. But I said I thought we were, what else? We were kind of thinking about, how can I say it? I've lost my train of thought. It's left the station, folks. I'm moving on. But what can you say? Oh, I was talking about the doldrums. That's what it was. And how sailors would get into these areas of latitudes that didn't have a breath of wind one way or the other. And sometimes they spent weeks, even months, getting through those latitudes until wind started picking up. There's a thing called the Coriolis effect that causes a lot of this kind of stuff. But in the stock markets, light volume up, light volume down does not make you feel all warm and fuzzy. When I look at today and see volume coming in on the downside today at less than 2 billion shares as we start the show, when we had 2.2 billion, which I thought was light, on the way up, was very tough. So we've got a market that is in a light and variable state. There isn't a lot of wind to blow it up or down. You thought maybe today with the dollar index, with a little bit of movement, at least up 43 cents on the dollar index, back into the trading range that this has been in, or at least I think it's been in, which is about 93.80 on the continuous contract through about 100. It's been in this lower range, which is 93.80 to about 96 bucks. And of course, a failure to blow out that low when we had every opportunity yesterday could say that we've got that trading range setting back up. A lot of people, including me, think that there is a lot of intervention going on between the central banks and the FOMC. I am one of them. I don't think that the dollar is trading in any fashion that would have reality behind it, i.e. supply and demand. It's more about what the governments can do. Normally, the governments just want to make sure that it's slow. Wherever it's going, they're not going to keep it from going there. But they want to keep it slow so there aren't a lot of big transitions in the marketplace. And a lot of people blowing up. They want them slow. They don't want everybody getting all jumpy all at once. But that's kind of it at the moment. Off 7 points in the S&P cash. Light volume. We had light volume up. We've got lighter volume down. We're going into expiration a week from Friday. And the market, at least option market makers, are wanting downside room and protection, and we could options at least today say that we could go as low as 2050. Unfortunately, we don't have a market that is cooperating in doing that. At least if you were going to bet that way, I have 85% of my money in cash, about 15% in 10% in one position that's long, another 5% right now. In one that I'm hoping will become something someday, but it's a very long-term bet. So I've got about 10% right now, and being long, And the only reason I'm staying long is not because the stock's acting that great. It's because people continue to short the living daylights out of it, and it doesn't seem to make a big difference. In fact, it's flat today after being one or in the top 2 or 3 shorted stocks the last few days. If you listen to this show last month, we talked about getting into Netflix for the exact same reason. That is that especially the old saying is do not be short a quiet market. And if we would have had volume today, I wouldn't have had any problem being all over it. I have a problem seeing very light volume both up and down and making me think that this market's going to make you wait either short or long a lot longer than you would like. But that's kind of it at the moment. But as always, we like to start off with a little bit of history, because if you do not know your history, you are doomed, I say, to repeat it.
That it's all just a little bit of history repeating.
And what do we got going on out here in, what was it? 1973, Secretariat won the Triple Crown, the last big Triple Crown winner. Is there anything since then? I don't know. I don't spend a lot of attention on horses. Other things going on, 1964, in a formal reply to President Lyndon Johnson, the rest of Southeast Asia is necessarily fall if Laos and South Vietnam, I can't even talk today, South Vietnam came under North Vietnamese control. The Central Intelligence Agency says no. But of course, Mr. Johnson ignored that, went on to move. And this not a big deal, but kind of one of the themes that I think about quite often, and that is that if someone tells you you're wrong and then gives you proof, generally most people are more interested in trying to poke holes in that than maybe adapting the wisdom of that truth. And in this day in 1964, I think we saw that we had somebody fixate on a position that they could not get off of. I always liked I can't remember who he was. I want to say he was like somebody with the Coast Guard. He was like a vice general or something with the Coast Guard down there for Katrina. And all the reporters kept asking incredibly stupid questions. And he said, look, folks, don't get stuck on stupid. But it happens a lot more than we would like on this day in 1964. Soros has his big short on, and he's worried for the outlook of the global economy. Of course, most of these guys are always talking their book. Very unclear how much money he has, although there are rumors. We'll probably start seeing the replies to that in the near future. But what else do we actually know about what he shorted, what he's thinking, what his bearish investments are? Not a whole lot. There was a wise comment today by Art Cash, and I'll play you his little clip of that. We'll talk more about the giant billionaires getting bearish. I got to make that longer.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, Soros, not denying the fact that he's put many billions to work on the short side, but kind of interesting because he's been the one espousing the political direction that we've been on for the last 8 years, spending huge amounts of his cash to actually support that direction. Now it doesn't seem to be working out, and he's more than willing to throw a lot of cash, maybe even more. You always wonder if these people are that Machiavellian that they will do something like that just to make money. It's hard to tell. Anyway, one of the things I thought was more interesting than that was a comment by Art Cashin today, and here's the clip.
Men of a certain age only survive in the business because the first thing they look at when they enter a room is the exit sign. Right.
And if you didn't hear that clearly, it was men of a certain age don't tend to last in this business if the first thing that they look at when they get into a room is where the exit is. Kind of why I always say, or in the show at the end of the day, sell when you can, not when you have to. A whole lot less prevalent than it was 15, 16 years ago when we had a host that actually took $10,000, ran it to $1.5 million in some wheat futures or something. Then it went lock limit down until he lost it all. You don't have the same kind of lock limit problems that we had in the past, but it is certainly one that is diminished but still there. I have a feeling that eventually those will come back to haunt us, although they tend to have done a much better job with lock limits. So at least there's some trading going on, and no trading seemed to cause bigger problems than slow trading. But kind of interesting. Of course, my favorite quote from Mr. Soros is, all of economic history is one lie and deceit after another. Your job as a speculator is to get on when the lie is being propagated and then get off before it's discovered. Sounds to me like he doesn't have a problem with his moral compass spinning wildly. But what else can you say? Disney has a big ESP problem, and we thought maybe it was the bundling problem. even though I'm not in that business anymore, I got into habit of reading Variety magazine, which is the let's call it the magazine of Hollywood. Probably 3/4 of it doesn't have to do with the business. It has to do with egos and who's making the most money making the movie. But there's a lot. It's really gotten more into a content magazine. And especially as more and more as we look at the stock market going after these content companies, I've been thinking about how some of this stuff works. But Disney, we'll look at their chart. But I was wondering about Disney and ESPN besides just the bundling problem. Bill Simmons is part of the Bill Simmons, of the, how can I say it, the posse is probably the good way to say it. It's the Jimmy Kimmel. Do I have other ones out here? The Stephen Colbert, the Carson Daly, Jimmy Kimmel, Bill Simmons, Jon Stewart. There's a couple of these posses led by the big men of television. Jimmy Kimmel has one. Of course, Jon Stewart, Stephen Colbert is kind of the East Coast version of that, all represented by the same guy, including Bill Simmons. James Baby Doll Dixon is the big guy. If you ever watched that movie, I'm trying to remember about Show Me the Money. I can't remember the name of it right now. That went on some of these big representative type guys. No, it's not the full Monty, you moron. James Baby Doll Dixon, that's actually true. McGuire, Jerry Maguire, thanks in the den out here. But anyway, I've been reading some of these, and I'm starting to think that Disney's problems with ESPN may be bigger. HBO is debuting the Bill Simmons TV show. He was basically thrown off because someone gave him a bunch of trouble from Disney when he made comments about the current commissioner of the NFL. It is very tough to have a station or a news organization that's supposed to comment when the NFL can take the ability for you to air those away from you. And the conflict of interest actually has become almost palpable. You've got probably 4 or 5 now big names that have left ESPN, including yet another one, I think either yesterday or today. I couldn't tell from the article. But it looks to me like there are going to be a lot of people that are extremely average left at ESPN in the very near future. Bill Simmons, kind of the big name. If you ever saw any of these 30 on 30 specials that he worked with, a big part of ESPN, at least at night, are these little documentaries that they call 30 on 30. Everybody, I think a lot of people have seen them. Well, he took that and left ESPN with all his brain trust, and a lot of people have followed him too. The question is, and I think he said it yesterday, is there anybody that you think that is capable left at ESPN to give you the real story if something goes on like last year where it was the NFL commissioner knew good and well what one of the players had done and that he'd screwed up. They just, if there's nobody to cover it, I know it's sports, but at some point you've got to have somebody like a Bill Simmons. I'm not big on sports, but I recognize, the kind of draw that a guy has that actually can tell the truth and not kind of just parrot what everybody else parrots and be insipid. But I think HBO has a much better long-term draw, whether or not it's Bill Simmons or some of the other folks that they've had on that actually have an opinion. We're kind of getting into this Disney world where the only opinion is PC, and maybe that is the big problem with Disney. They have drunk the Kool-Aid, so to speak, and all you get is this kind of bland wanting to bring up anything lest they lose the NFL contract or the baseball contract or something else. maybe somebody that doesn't have any ability like HBO, and you can watch on demand. But Bill Simmons, the biggest draw at ESPN, gone for a while, and not a lot of people talking very nicely about Disney and its ESPN TV show, much less the problem that they have with cord cutters and the list. Anyway, just a thought out there. Disney may have a lot bigger problems. We've talked about what I think may be big issues also in their Star Wars issue, and that is it's all about putting out good content. HBO with its Game of Thrones, other places like Amazon, very hands-off. Disney, just the opposite. There's nothing that they won't play with or manipulate or get in there and make it just as vanilla as possible. And I'm wondering, in a world where we have Donald Trump and others that say things to get attention, if Disney isn't getting just too bland for the world. We'll be back after this timeout.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we look at Disney, I just wanted to look at the price action, not so much the volume lately, but you know, you've got this big gap down we've just come off of. We're back into this lower trading range. Is Disney a bad company? Probably not. Are they going to zero? No. But a lot of these companies, I think of Mattel and its Barbie franchise that is doing rather poorly. You get these kind of generational moves after some time, and then everybody wants to come in and make a Barbie that's, I don't know, Drag Street Barbie or something else that's topical at the time, and it never seems to really go that far, or Fat Barbie or Skinny Barbie or all the other Barbies, so that everybody feels good about themselves. I don't think that 4-year-olds or 8-year-olds are thinking about it that much. Of course, we know that parents buy products, but Disney, not on my top list of companies. Well, let me put it this way. They've gotten a lot of bad press, and a lot of it justified. But if you're going to run a news organization, you kind of have to take the good with the bad. And maybe you don't need an ESPN or a deep kind of analysis if all you're going to do is skim over the warts and the other things that you cover. Disney coming down with, at least back to this congestion range that runs around in the 96 level. I think we're probably going to get into that, and it's probably going to tell us whether or not you can get back down into those lower 90s. But ESPN and maybe some of the others out here may have bigger trouble than I first thought. I kind of missed the big first bounces down, and I'm not exactly sure why. I did miss them. I missed a lot of things, but I wasn't long Disney when they were headed down. Wasn't that far off, but a lot of stuff going on, so you kind of have to keep an eye on it. But maybe we are in one of these generational changes. I'm wondering how many kids actually play Monopoly anymore. It's all video games. You get these generational changes, and a lot of times they're because of either technology or maybe just time has passed them by. And I'm wondering if Disney's very generic version of many things has changed. One of the movies that was out this week on DVD, most of the comments were that they took a great movie and kind of made it very average. When I was reading the reviews of it, not that it was a bad movie, but by trying to make it something for everybody, they make it very bland for everyone. Let's take a look at a bunch of stocks. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. No, I was just talking. Somebody in the den said Barbie's Mattel, not Disney. No, I'm just talking about Barbie. Mattel's a problem in a changing market. The thing's been around for, and it does bring them around when they're young. The biggest problem with I'll go back to Disney here for just a second before I go on. The problem isn't Disney and the 8-year-olds. The problem is Disney and Nickelodeon and Disney and these semi-adult movies or adult movies that are just not pulling it in, that they just don't have. Once you get to 12 years old, maybe they don't have that cachet anymore. The numbers are not good on Nickelodeon. That's what I'm saying. Disney does have a problem in its brands that go above about 8 or 10 years old. And that is, from ESPN to Nickelodeon, which is more, the 10-year-olds, especially at night. And Disney may have grown too much. I don't know. But I have a feeling that they've got this pattern made, and the pattern is McDonald's. And the world has changed. You can go to Chili's for the same price as McDonald's. I do at lunch. I can go and eat a nice Chili's lunch for $8 and have quesadillas and chips and salsa and a salad or a soup. Or I can go to McDonald's for $6.50 and have a Big Mac and fries. That's what I'm kind of saying. There are problems in what they're doing. When you have an HBO or you have an Amazon that can do things without commercials and do them right and do them well, it is a changing world where it isn't how well you control the creative process. It's that you have a creative process. I like that. I'm going to write that one down. The advisory board company, ABCO, came down on monstrous volume on the 24th of February. It's finally come back up into these things. You know, I don't see these things pulling off, which would be a good reason to start pulling the ripcord and saying that the market's headed back lower. We're only off 4 points on the S&P cash. Volume still nothing. It's not like volume started coming in when we did start moving up off these lows. It's low up and it's low down with just 2.2 billion shares. But again, some of these either at highs or lows are not really giving me a lot of comfort in saying that we've got a direction of any kind. 1.5 million shares for the last high on May 6th on the advisory board company, compared to what, yesterday, 326,000 shares. And of course, 178,000 shares so far today. Not a lot of volume at the highs, not a lot of volumes as you pull back lower. Very doldrum-y as far as I can tell in many of these stocks. But we will persevere. APC, Anadarko Petroleum, had a nice little bounce to $57. It's back into its trading range. 4.1 million shares yesterday, going into the April 27th high that had 7.6 million shares. Again, not a lot of energy on these last legs up on many companies. May 9th to this high from June 8th yesterday. Energy was severely off compared to the April 27th high down to that May 9th low. So, you know, we've gotten to these levels. Everybody is still chasing huge amounts of cash. In fact, I think I'm going to write about it tomorrow in the Tech Insider. But, you know, you've heard these stories of the lawsuit with Gawker and Peter Thiel. And it's not these big guys of Silicon Valley backing lawsuits are not just trying to be and getting and going after people that have wronged them in the past. There's a lot more of that going on right now. And the reason is it is incredibly hard to put any money and get the kind of returns that these guys have been used to in the past. And I continue to think maybe we're seeing a market that is much more like that. And there's a lot of people funding lawsuits in Silicon Valley just because they can put up $5 or $10 million and potentially get back 50. Right now in Silicon Valley, everybody's bidding these unicorns and new ideas up so high that there may not be any money on the other side of it. Anyway, Anadarko up on light volume, back into the trading range. Light and variable continues.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Cogent Communications Group, CCOI, another one of these testing highs. About half of the volume and even lighter volume today. Yesterday, 334,000 shares. Today, just 149,000 shares going in to the spike of April 4th with 620,000 shares. This is kind of a lot. We've got a very light market out here. I had some emails during the break. Where did those emails go? Hard to tell. I'm bringing them back up now. Closed my email client for some reason that I cannot think of. But one of the questions I just vaguely remember was what would change my mind? A great deal of this is what and when people quit heavily shorting these highs. I've seen it before, and it seems to be, and my back testing now does tend to agree, and that is when you start seeing many stocks that are being shorted continue to go higher, but at the same time, eventually, when the shorts blink and quit shorting these things each time they go higher each day, you kind of want to look at that. And I've got one of the things, if you pop it up here, we've got stocks getting shorted with huge amounts. Yesterday, LILAK, 36% of the shares shorted. Siri, SIRI, 31% of the shares were short. Tesla, 28%. Netflix, 28%. Micron, 24%. STX, Seagate, 23%. MAR, 23%. Expedia, 22%. Monster, Stores, 20%. When I see that, I just know that there are so many people that what happens is the stock goes up another 50 cents or $1 tomorrow, and they just cover. And you get this kind of insane feedback loop of shorting in the morning, covering in the afternoon. Those percentages, by the way, don't mean people went home that short, just that during that day, that percentage of stock shares were initiated with a short position. But Tesla, 28%, doesn't make me think that I want to short Tesla just yet. Too many people on one side. In fact, I was talking to Andy just before the break, and we were talking kind of philosophy, but I had to shoot back a quote from Mark Twain, and that is, whenever you find yourself on the side of the majority, it's time to pause and reflect. And especially in shorts, that's what I tend to look at. But whether it's the, I'll put it back up here, whether it's the Qs or the SPYs, Frontier, 33% short yesterday. Let's take a quick look at that. FTR. I know a lot of people down here in Florida don't like it. They haven't been doing a good job since they took over from Verizon. But I just don't see massive shorting of a stock that's $5.20, but that can be other ones. Lennar, another one of the stocks were 31% yesterday. We're shorted. I'm not surprised to not see these stocks going higher. Going much lower today. Generally, huge shorting does not mean the stock goes down. It means the stock goes up. All you got to do is hold on for a while, and normally the shorts will blink, and even if it's 50 cents higher, they will cover. So I tend to wait until the market, until shorts give up, and that's generally the best time to actually short. Too many people on your side, it's time to pause and reflect on some of these. Question to look at Netflix real quick. NFLX is another one of these stocks that's being heavily shorted. It's come back down a little ways, but as a percentage of what is kind of light volume, I would also probably be a little wary of being short Netflix. I think they've got a lot of problems, but in the short term, could you see a move, especially back up into $104? I wouldn't be surprised. When I play it, I got another email. Would I think that it's going to run again like it did last expiration? I don't know. I'm going to have to take a little bit bigger look at it. CHK, another one of the huge short positions, at least coming in yesterday. 27% of all shares in Chesapeake. Again, down a little lower today, but this is what happens. You open, you push it lower, and everybody starts covering because, of course, everybody's short. So as soon as they see a couple of dimes, they're already pulling the trigger to get that cash back. And that is the demon that is high short interest and other people agreeing you need a stock to actually break without high short interest so that there aren't that many people covering all the way back down. You need an air pocket down there where there aren't a lot of natural buyers. And speaking of that, Restoration Hardware, we need to pull out the loser horn for it today. As it came out with earnings after the bell last night, 25 million shares going through 3.2 million shares, or even look at the $35.03 low for March 18th, were 5 times that? Does that also mean that we could have seen some exhaustion move in this stock? I think the answer could be yes, but normally exhaustion moves mean that you have to sit and let the stock consolidate for a while. It's not just buy it today. First of all, on any of these, I have a 3-day rule, and that is I would never touch a stock like this for at least 3 days until anybody that was long. I do have to I didn't bring it up yesterday, but I thought it was kind of funny when I saw this thing absolutely get demolished after earnings last night. And I TiVo the CNBC and just kind of fast forward through it and look at the closed captioning a lot on it just to see what people are talking about. Not that I put a lot of weight in what 99% of the people talk about. If there is a big man of the street that is a straight shooter, then maybe I'll pause and watch it. But I do want to know what kind of either information or disinformation they're pushing out. But there were 3 or 4 of people pushing the stock all afternoon yesterday, telling everybody how it had already bottomed. And I noticed that those people were off the CNBC website today. They mercifully took their video clips off, or I would have gone and grabbed them and played them back to back because they were pretty interesting. I just know that maybe there's one trend more than another. Anytime I tend to pound the table on anything, I generally tend to be kind of wrong. When I'm nervous, when I think that there's a chance I can be wrong, it seems to me like stocks work out and my positions work out a great deal more than I thought. But down and pretty much blown away out here on low volume. If the CEO changes, maybe you could think of something like a kitchen sink is in on this, but normally without a lot of change in the company, you have to kind of give it some time out here. There's no catalyst for finding a bottom that I can find yet. We'll be back after this brief time out.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And you can be like Steve in Boynton Beach, Florida, and email me at path@tfnn.com. And, of course, at the same time, tell some of your friends about this show. It comes on every day between 2 and 3 live. And, of course, if you tell 2 friends.
And he tells 2 friends. And she tells 2 friends. And so on, and so on, and so on.
Then we'll have a lot more listeners, and I'll be happier. Anyway, the question was, could we look at what options are starting to tell us already? And for the most part, they're saying that we're probably looking a little bit lower. We'll see how these come in over the next couple of days. I don't see any real positions that I want to take on this yet. But right now, we're looking at around a 205 on the SPY as what the options are predicting. Even if we go out to the Julys, it's only 206. So, of course, 7 points lower on the SPYs, which would come out to 70 points on the S&P cash. Normally, you will see is that number and the number we're at now tend to converge. So maybe 208, something like that, 209. But we'll see that tonight, or I'll start seeing it tonight if it's going to do that, so we can talk about that tomorrow. But again, just light and variable trading, very tough. Got a question to take a look at Alibaba. Of course, they've got problems with the SEC, and the question is going to be whether or not the SEC has any teeth, or it's just a paper tiger. The Alibaba Group, of course, bouncing a little around a bit down, but of course their big gap down on was the 1st of May, but mostly around the accounting for their big holiday over there. I forget what they call it, Singles Day, I think that's it, and what they're actually doing. So they're going to dig into that. In the past, the Chinese government, when pushed, is told the SEC to pound salt. One of the reasons that I would not be long a stock from China, I might be short, thinking that there's fraud involved. I have no inside knowledge on this, but there's a great quote I have from somebody that asked and said that after all history, the accounting and books, or all the books, are either gently roasted or completely fried. And you always have to wonder, you always have to know that people are trying to put the best light on books, and sometimes just totally obliterate them, like Enron. Most of the time it's somewhere in between a giant fraud and just well-wishing. And the question is, especially when you can't get to any of these documents for Chinese companies, do you really want to risk your money? I want to know that the CEO can go to jail, that the long arm of the law can go get them, and maybe hope that that threat makes them maybe want to be just a little bit more honest than not, especially in China. Do you think they're going to extradite the guys and the guy behind this? My thought is, nah, they're not going to do it. They'll just figure that they took a lot of money from the New York Stock Exchange, and that's it. If it's not, who knows? But there are 7,000 stocks, maybe 5,000 of those tradable on the exchanges. There are commodities. There's a lot of stuff. I just don't understand going after the risk of Chinese companies unless they start falling in line with U.S. laws. In the meantime, sell when you can, not when you have to. Hang on for Tom O'Brien and then Andy Heck.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.